Tesla absolutely crushes it in Q3. It's everyone's favorite quarterly event. This is Tesla Tidbits episode number 463 for October 25th, 2018, covering Tesla's Q3 2018 earnings call. We'll start the show with the technicals of the Q3 earnings results in the investor letter released today. This is the moment that I've been saying for a long time was Tesla's moment of truth. Back in the Q1 earnings call, it was made clear that Tesla's business model for Model 3 profitability required them reaching their targeted 5,000 car per week production consistently. This quarter, being the first where that has been true for the whole quarter, was that moment. If Tesla couldn't be profitable under their own ideal conditions, how could they be at any other time? Ladies and gentlemen, they brought the goods, posting the best quarterly results in the company's history. As Elon has been saying they would be, the company was GAAP profitable for the quarter, and not just by a little bit. Tesla was $312 million to the good, besting the company's previous best quarter of $22 million by an order of magnitude and then some. This equated to $2.90 earnings per share, beating analyst estimates of a loss of 19 cents per share. In another positive sign, cash reserves, which had been trending downward and were hovering around the $2.2 billion mark, increased by $731 million to bump the company to $3 billion on hand. Model 3 margins were over 20% via GAAP and non-GAAP accounting methods, and the company restated that it expects to be profitable again in Q4. Some of the highlights accounting for the good news include that they've found a way to reduce labor hours on the Model 3 by over 30% from the previous quarter, which actually makes the Model 3 finally less labor-intensive to produce than Model S and Model X. Considering that Model 3 was designed for production simplicity, and that Model X, in Elon's own words, was probably the most difficult vehicle to produce in the world, this is probably about time, considering we're more than a year past the first deliveries of Model 3. The company states that the Model 3 production system is finally stable, and rather than making steep improvements each time, the improvements are now coming more gradually on a monthly basis. In a little tidbit of hope for you folks looking to lease Model 3, buried in the investor letter is this bit of good news when talking about Model 3 buyers. Quote, "It is clear that customers are trading up their relatively cheaper vehicles to buy a Model 3, even though there is not yet a leasing option and the Q3 starting price of a Model 3 was $49,000. End quote. So there you have it, the language saying there is not yet a leasing option. This would of course imply that one is coming. Huge news for European fans next in the letter. It would appear that the design studio will finally open for you folks before the year is out. Quote, "The mid-size premium sedan market in Europe is more than twice as big as the same segment in the US. This is why we are excited to bring Model 3 to Europe early next year. The reception at the Paris Auto Show, as well as the Goodwood Festival of Speed, was very strong. We expect to start taking orders in Europe and China for Model 3 before the end of this year." End quote. Then we got a glimpse into how efficient Model 3 is with this next bit of the letter. Quote, "With Model 3, energy efficiency improved dramatically to 4.1 EPA miles per kilowatt hour, the highest efficiency for any all-wheel drive EV. To put this in context, our current or upcoming all-wheel drive 2019 competition is expected to achieve 2.4 to 2.8 miles of EPA range per kilowatt hour. Model 3 has far better energy efficiency while also providing the quickest acceleration, 0 to 60 miles per hour in as little as 3.3 seconds, and the highest top speed, 155 miles per hour. Additionally, the curb weight of Model 3 long-range rear-wheel drive is only 3% heavier than its gas-powered equivalents." End quote. All right, that's enough of the investor letter. Let's get to the earnings call. I have made an upgrade to the show for these earnings calls episodes, and we're going to hear audio clips from the earnings call now as part of the show. Yeah! Reasoning for this is twofold. Firstly, it makes sure that quotes are perfect. I've had some trouble deciphering what was said in the past, and now not having to transcribe it will ensure the best accuracy. And secondly, of course, you get to hear everyone speaking. I'll preface what's coming with my own comments, play the clip, and then drop any commentary following the clip. With that said, let's get to it. Starting off, Elon made some opening remarks as usual, and after a short list of things that have already been covered on the show, he thanks the fans that helped deliver the cars at the end of the quarter.
I want to thank everyone again for incredibly hard work. I especially want to thank customers who helped. It's like I've never even heard of this maybe this has happened before, but I've never heard of a case where a company's customers actually cared about the future of the company so much that they volunteered their time to help a company succeed. I think that's amazing. Just don't see that anywhere. So, yeah, it's like really chokes me up, actually.
We shift to the safety of Model 3, and really, Teslas in general. Elon gets to talking about how Tesla, as he so eloquently put it, anti-games the system by testing the car in its least favorable conditions to strengthen even the weakest areas of the car. This certainly explains the industry-leading injury probability ratings for all Tesla vehicles.
Exactly, that's what I mean by like anti-game the system. Like, say, what is the worst way that the car could be hit? Not just sort of strengthen where we know the test will happen and that kind of thing. Obviously, we're all in these cars. Our friends are in these cars, families in the cars, so we care a great deal about safety. And a lot of people think safety is boring, but not at Tesla.
We now get to briefly talk about software version 9, and the confusion is dispelled regarding Navigate on Autopilot and specifically how it will work.
This is Stuart Bowers. We'll soon begin to roll out the team's most advanced Autopilot feature ever, Navigate on Autopilot. In our last release, we launched a new set of neural networks that combined together provide a view of everything happening around the car. With Navigate on Autopilot, we'll use information to understand exactly where the car is on the highway system and to automatically change lanes, handle forks, and take high curvature exits to follow a nav route. Initially, it will require drivers to confirm lane changes using the turn signal before the car moves into an adjacent lane. Future versions will allow customers to waive the confirmation requirement if they choose to.
So you won't get that total freedom right at the beginning, but after a software update, you'll be able to let the car change lanes on its own without you having to lift a finger. Now we get to the Q&A section of the call. First up is a question about battery cell supply. You might recall some rumors that Tesla wasn't able to keep up with cell demand for a while during Q3. This was mostly false, as Elon and JB explain and elaborate on.
My question is about cell supply. There's been some noise about tight cell supply and sparks and tight labor supply. Like, in the short term, could you just talk about whether demand is outpacing supply of battery cells and kind of what's your plan for long-term expansion, including cell supply in China?
JB, you want to take it?
Sure, I can speak to that. This is JB. We have had a period where the supply was fairly tight for Model 3, but it did not really constrain the Model 3 production in any significant way.
Like for a week.
Yeah, maybe for a few days.
Yeah.
The impact was larger felt on the energy products.
Yeah.
And that still is somewhat tight, but we do, as we pointed out in previous discussions, we do have third-party supplies of energy cells, so that production can continue even independently of the Panasonic supply in Sparks. So that's been very helpful, and that is expanding in future quarters. And also the Panasonic supply is expanding. The productivity of existing lines is continuing to improve with a lot of hard work from the engineering teams and just operational stability. And we continue to bring online new production lines. So even just in the last several weeks, we've started up yet another cell production line with Panasonic, and through the end of the year, there's another line coming on, and then one shortly after that. So there's a steady increase in the total supply that should keep us ahead of even Model 3 growth, and also should let us have a larger percentage of energy supply be sourced from Giga locally.
I know I've probably buried one of the biggest revelations of the call, but here it comes near the end, and, well, I'll just let Elon take it from here.
Are we starving new vehicle development in order to achieve GAAP profitability and cash flow positive? Would that be inaccurate? Is that essentially, like, the answer is no. We've made significant progress on the Model Y. So in fact, I approved the prototype to go into production recently. We saw it'll be 2020 before that's in volume production, but we made great progress there. Also continue to make progress on the Semi and the newer Tesla Roadster. And then Actually, the product I'm personally most excited about is the Tesla pickup truck. Like, I think that's going to be some next level stuff there.
So the Model Y prototype has been greenlit for production. This is superb news for everyone looking forward to that vehicle and fits in nicely with Elon's March 15th estimate for the unveil of the vehicle. Should be plenty of time to get a couple of them built, tested, and ready for a prime time event. For those of you out there that have been agonizing at the time it takes for your car to reach you after your account says that it's being shipped, know that Elon is definitely aware of this situation.
In August, the average time in North America to get a car from the factory to a customer was 30 days, which is embarrassingly long. By the end of the quarter, we had reduced it to around 20 days, and our goal in Q4, this is a goal, not a promise, but our goal is to get the average time of a car from factory to customer under 10 days.
Next up, in what seems to be a quarterly attempt anymore, yet again, somebody tried to pry exact battery costs out of the team, and it ended pretty hilariously.
Okay, and on the battery cost, that was a question.
Well, that is a key sort of a competitive metric. So I think it's safe to say we're much better than anyone else by a lot, but we prefer not to give a precise number.
And ending the call, Elon, knowingly or not, strikes a savage blow against the competition, almost kind of offhandedly.
As our quarterly letter indicates, the Model 3 has is the most efficient energy per mile electric vehicle out there. It's got the best efficiency. So we've got the best in terms of miles or kilometers per kilowatt hour, and we also have the lowest cost per kilowatt hour. This makes it very difficult for other companies to compete with Tesla because we have the most efficient car and the lowest cost batteries. So I do encourage our competitors to really make a huge investment. We've been saying that for a long time, and then they're only in this competitive disadvantage because they didn't. We try to help them as much as we could, and they didn't want to take our help. But so they can use all our patents for free. We're happy they can use our Supercharger network if they can just have an adapter for our connector or something. We want to be as helpful as possible to the rest of the industry. But the fact of the matter is, we made the investment in the Gigafactory, and other companies didn't. And we put a lot of effort into having extremely efficient cars, which the other, having most efficient powertrains, and the other companies didn't. But I'm sure they will over time. But that's what has put us in quite a strong competitive position right now.
That's it for the show today. Please let me know what you thought of including the audio. I know it makes the show a lot longer, which a short show is normally my hallmark, but I think you folks crave the knowledge on these earnings calls, and we'll take 4 shows a year that might have some length to them, especially with me editing in only the best parts. I'm super proud of the effort, and I hope the final product is as good to you as I believe it to be. You can check out the source material for the show at ir.tesla.com. While you're out there on the internet, please consider supporting the show financially through Patreon at patreon.com/Tesla Tidbits. Thanks to our super patrons out there supporting the show at the $10 plus level. They are John Moltower, Drew Schuyler, John Waller, Mark and Sarah Thomas, Ryan Scarborough, Lee Sweet, William Henry Crew III, Dory and Steve Guberman, Bruno Kundici, Joey Boots, Ralph and Cheryl Waterhouse, Adam Raymer Brown, Megawatt Photovoltaic Development, Todd Sullivan, Robert Healy, Mitch Long, Zortec LED Canada, Morvan Ogg, Blake Thompson, Raymond and Deborah Malkowitz, T Sportline, Michael Pastroni, and Travis and Cheyenne Rush. If you're looking to purchase a Tesla, you can enjoy unlimited supercharging for your first 6 months of ownership and hook me up with some Tesla swag if you use the referral link ts.la/Jim50888 to purchase your vehicle. Of course, if you can't support with dollars, that's quite all right. Feel free to leave a positive review, subscribe, or like the show on your platform of choice instead. If you have feedback for me, as always, the best way to be heard is to tweet at Tesla Tidbits and use the hashtag AskTeslaTidbits if you'd like your question to be considered for the show. Normally, I'd say I'd see everyone back here again on Friday, but due to this show, I did not record for Wednesday's show, and I don't plan to record for Friday's show either, unless some major news decides to break and I need to get a show recorded. So I guess I will see you back here again on Monday. Until then, keep it charged and hit the road.